I don't think people give it a lot of thought as to the ramifications of what we're witnessing, and we're only on the cusp of very interesting development that's going to take place for the months, years, and decades to come. Jesse.
So you mentioned having a currency potentially backed by gold. So I wanted to get your thoughts on tokenized gold and silver on the blockchain, and if that could be a potential solution. The World Gold Council is launching an initiative called Gold 24/7, where they're looking to create a gold token. There's several apps out there that have a similar service. I personally prefer physical, but as somebody who travels around the world with all my possessions, it's kind of tough sometimes. I mean, I was at an airport not too long ago where I had 4 security guards digging through all my gold and silver, taking pictures of it, questioning. They'd never seen it before. They didn't even understand what it was. And it was this whole to-do. Japan taxes all your gold at 10% when you come in. They have special detectors that detect gold specifically. So if you have any size, even a small amount of gold, it just stings to pay the Japanese government 10% just to enter the country. So I'm wondering if tokenized gold and silver could kind of be a way around these sorts of things, and even maybe could attract some people who are more interested in crypto and maybe haven't had an interest in physical precious metals to also dive into the space. What are your thoughts there?
Yeah, Jesse, the cryptocurrency and the digital currency is a very controversial subject. My personal view on that, and I came from the dot-com era, as I mentioned to you. I have an engineering degree. I was a programmer. Is that the cryptocurrencies were invented by the authorities to divert attention to gold and silver, and honestly, even though a lot of people critique about the SWIFT system, it works. Okay, it's not like, Jesse, one day in the bank you discover some of your money is fake. Like the counterfeits is a very minority of the system. So that the system has a chain of integrity. The current fiat system has a chain of integrity. It's not, and the SWIFT system works relatively well. And so the whole crypto, I believe, is sort of paving the path to the eventual adaptation of the central bank digital currency, which is inevitable, is coming. And the reason for the CBDC, the central bank digital currency, is that the authority you want to control, because now everybody's so wealthy. They used to be able to control you because you're poor, but now when everybody has money, now they have to find a different form of immobilize you. Okay, so the way to do that is, first of all, it used to be that but everybody credit, everybody can travel. It's really a pain in their eyes. So now they're imposing health mandates, carbon mandates. And then soon enough, it's going to be the digital currency mandate, the central bank digital CBDC, where they're going to dictate on when you shop, where you shop, and what you shop. So for example, if they want you to work at 7 in the morning, they're going to impose a curfew during weekdays at midnight. So your money is not going to be good past midnight. If you have a 7-Eleven next door to you, they're not going to let you buy a can of Coca-Cola in Costco that's 40 miles out. And if you had consumed too much carbon, so they're already talking about a carbon limit of 1,000 kilos per year. Well, a flight from Taipei to Toronto is 950 kilos. Okay, so if you were endeavor to take that trip, that means that you have to be eating tofu for the rest of the year. And so this is really what they're getting at. And and the crypto is a protocol and the advent of training for you to get to that eventual central bank digital currency. And now in gold-backed currency, who's the arbiter, right? That's the question. In fact, I think there's a lot of countries that had tried to experiment to stabilize with good intention of instituting a gold-backed currency, but that's all been shut down. Like even Switzerland had a referendum on restating gold to back their francs, and just a lot of pushback because they know the guys that we talked about that are managing the world managers. They know that they cannot have that because the good money will eventually overcome the bad. And so I don't know how it's going to play out and whose digital currency. You're going to have several different versions of the gold-backed currency as actually right now privately in circulation. So it's all about who's the arbiter, who's watching the watchdog. And in the end, Jesse, there's no better way of owning gold and silver physical, which is what I'm advocating big time. And I've started buying gold again. for the first time this year after 10 years hyenas, because I see the paper game eventually going to be blown up, and that I think 10% or 5%, Jesse, in the overall scheme of things is immaterial. You got to own the physicals. You got to own the physicals in different jurisdictions, and that is what I recommend. So yeah.
So I want to touch on silver specifically here, because when we chatted in our previous meeting, you said it presents one of the greatest opportunities right now. So maybe walk us through that and the best ways you think to play the sector for your average investor. Is it always best to start with an allocation to bullion and then maybe move on to the big producers and then maybe speculate on developers and explorers? And as a follow-up, what are the main things you look for when evaluating a silver mining company?
Right. So you talked about three things. Why is silver going to be an investment? The difference between investing in silver versus in equities, and if we want to decide in equities, what are the things you got to watch out for investing in mining equities? Different things are trading on usually in a good equilibrium, but they do break out, like the price of apple versus orange. Or the ratio of wheat versus corn versus soybean. There's actually a ratio of gold and silver that has been through the test of time, or the ratio of gold to oil, because these are limited supply. These are sort of form of money and store of wealth. Historically, gold and silver is trading at a band between 30 to 100, and with the historical average at around 70. So the ratio peaked. So when gold to silver ratio is at heights, that means that there's a lot of fear in the street. There's not a lot of froth. There's not a lot of speculative demand. There's not a lot of speculators. There's no greed in the market. Subsequently, when the gold to silver ratio is low, that means silver is relatively more expensive than gold. That means that there's a lot of greed. There's a lot of speculation. And the audience of gold and silver are also different. Gold is more central bank play, where silver is more retail play. That's why they call this poor man's gold. And then there's a silver, it got this dynamics of the industrial demand on batteries, on solar panels, on electronics, and so on. So if you look at where we stand right now, gold to silver ratio is at around 80, 2,000 gold and $25 silver. Not only 4 or 5 months ago, when there's a climax in the fear, when equities are things like going to break down and everything's going to go, the blood on the street, and Robert Kiyosaki's, the Peter Schiff is having their field day, and that ratio was 100. Gold was $1,700 and silver was $17. So only once or twice or three times in history has that ratio been reached, and that's why at that time I called the bottom for gold and silver, and also the top for the dollar. That was October 2022, 6 months ago. So since then, that ratio has quickly descended to 80, and gold right now is just over 2,000, and silver is 25. Once that ratio pendulum is reached one way, it's going to swing down the other way. It's almost without fail. And last time pendulum swung, it was silver went to $50, and gold was around $1,600, $1,700. So that ratio was 30. So if I peg the ratio of gold that's imminent to break out at say 2,400 this year, and then just say, if things go really, if we get a little breather on interest rates, a bit of relief rally, a bit of a breather in sort of bearish view, and the resumption of a bit of a greed in the market, at say even the 40 to 1 gold to silver ratio, which is at the lower end, and then divided by 2,400 divided by 40, you're looking at about $60 silver. So that would be sort of on the top end of my forecast for this year. But on the low end, I see gold. I see if gold were to break out, silver is going to break out that important resistance of $28. There's a brief technical stop at 35, but after 35, it could go anywhere. It could go wherever it needs to go, and the top is only established in hindsight. So relatively, in terms of the risk reward, gold's upside from here is around 20%, but the silver's upside here could be easily a double. So that's why I see, and fundamentally strongly back this thesis. And a lot of the gold investors, some of them are also retail, they will be looking to swap into silver as well. So now talking about the question of silver versus equities. This is how I akin to compare to that to say holding US dollars versus S&P 500. Gold and silver is money. It's a store of wealth. It's a currency. It's very liquid. And so you would, depending on your risk tolerance and time horizon, just if you're 80 years old, right, you're not into speculation game. You already figure out what is your nest egg and how much money, how much year you need to spend. So in which case, it's not entirely like I would not be opposed to say put some money in very short term T bills, ride the high rising rate, get some yields, and then put some money in gold and silver. You don't need to be specking on the equity market because you cannot, because a 20% volatility down is not in your cards. You're not ready for that. So the risk tolerance and your time horizon is very important. So for these investors that has a 3 to 5 year horizon, looking for a bit of maybe risk adjusted reward more than say the 20% looking for gold, then if you're looking at the mining equities, and I think a good example would be if a silver miner break even is at $30 and price of silver is 30, the company is not going to be worth much money because generally no earning. But if all of a sudden silver price go to $50, and if the mining company were to producing 10 million ounces a year, then all of a sudden the cash flow went from $0 to $200 million. And if you got on reasonable PE, the company went from peanuts to multi-billion dollar. And this is what happened last time round when silver's full went to 15 in early 2000s. There's several junior companies like First Majestic and Silver Corp that went from $50 million non-producer to multi-billion dollars 10 baggers. So that is how that company. But but at the same time, I want to just preface really quickly that for every company, Cinderella success story, unicorn, you have 3 companies that fail to get to that because of geopolitics, because they inherit operational risk of a mining operation, or because of mismanagement of the mine, or some technical issues, or whatever, right? That's why I'm a very strong advocate of putting eggs in different basket in a mining company. And even the insiders within our industry, I often talked about, I personally lose a lot of money in investing in junior mining. That's somebody with 20 years of history and that do nothing but in the mining sector. So, and I've several of them go belly up. It's like Warren Buffett said, right? If you're a 30% bet, you just want to make sure you hit that home run, not to cash out too early. Then that would more than compensate for the other strikeouts that you have seen. But I think just a quick note in that, besides Silver Elephant, which is because right now it's a buyer's market, there's more opportunities available in the mining space, and there are capital that are deploying into the space because of the carnage from the cryptos. And then last year's the equity correction. You don't need to be speccing out for exploration story. There's plenty of companies out there. Several companies are quality and already made a discovery. The money they invested in the project exceeds the valuation of what they're trading right now. So I think these are very interesting stories that you should look into. And I don't buy into Rick Rose saying that management is paramount, the number one indicator. Well, if you have a lousy asset, you should be putting lipstick on the pig, right? It's not going to fly. So you got to marry that asset, talk to the management, understand that can the mine eventually can they develop a resource that could turn into a mine? Because the cost of developing a mine, well, the efforts putting into developing a small project is almost the same as into a big project. So you want to make sure whatever project you invest in, it's got to have the potential of getting to at least 3 to 5 million ounces of gold or close to 100 million ounces of silver. So these are the availability of the CEO and that the potential growth of the resource base are quite important to determine at least the initial sort of qualification in your choosing the right mining company to invest.
Yeah, those are great points. And I like what you said about management as well, because so many people say, that they have the different P's usually, and people is always number one. Management is always number one. And as a retail investor, that often isn't such useful information because, first of all, retail investors don't have direct access to management. You can't just pick up the phone and call the CEO, generally speaking, depending on the company, of course. And also, if the project itself isn't great, if the deposit isn't great, if the geology isn't great, then it doesn't really matter who's managing it. So I think that's a very good point. Why don't we segue into Silver Elephant Mining now? And if you could give us an overview of the company, your projects, and any upcoming news flow or current news flow that you think investors should be paying attention to.
Jesse, this project name is Pulacayo, as you had introduced at the start of the show. It is a project that's in Bolivia. Bolivia is the 6th largest silver mining district in the world. It's actually above Argentina. They share the same geological trend, the silver belt, that went from Argentina from the south all the way up to Peru in the north. So that belt is the most prolific belt in the world. The way I look at it, I mean, Jesse, I went from the top-down approach. I visited 40 countries. I lived in 4 different continents, and I looked at dozens of different projects. So I had my eyes set on Pulacayo 2005 when I was an investor. And when the project became available to Silver Elephant in 2015, I grabbed it because that was the low for silver at $14 an ounce. So in a way, I am really sort of an opportunist, looking for the top-down approach, looking at the underlying metal I like and pick it up from the bottom and looking at an asset. And my criteria is an asset that's of size. So when I looked at Pulacayo at 2005, they didn't really have a lot of reserves and resources. But fast forward to 2015, $40 million had gone into the project. Over 100,000 meters of drilling had gone into the project. 100,000 meters, 100 kilometers of drilling into the ground, oftentimes are 100, 200 floor deep. So there's a very high confidence level of the resource that's established in the ground. The project has excellent community relationship, and we have access to power and water. And Pulacayo is one of the legacy mining project, a brownfield exploration project that actually fueled and funded the Bolivia's railway to Antofagasta, and subsequently the silver from Pulacayo was shipped to Spain and helped Spain conquer the world back in the 1900s. So we're dealing with a community that's very comfortable with mining. There's not other industries out there. So we're very comfortable with the address. And Bolivia, so we talked about the investment sentiment and the pendulum. Bolivia had about a 10-year lack of foreign investment, and now they're embracing foreign investment with open arms. And several companies had successfully been operating in Bolivia for more than 2 decades, the likes of Pan American Silver and Coeur d'Alene. And Bolivia, as an investment destination, had attracted a few $100 million of investment raised in the Toronto Stock Exchange and New York Stock Exchange. So we're relatively comfortable with the jurisdiction. And now what we're doing now is de-risk the project. It sounds a little cliche, but it's true that we want to make sure that the project is shovel ready. We have all the necessary paper and the endorsement and support from the community and from the government. So that when the silver price is more like 20% from the top, then we'll be looking at either commission the mine to production if the capital markets were conducive for us to raise money, or we'll be opening ourselves to a competitive bidding by the strategic majors that are out there. However, it is my belief that the silver price is more like 20% from the bottom. Well, right now from 1650, so we're about 35% from the bottom, but we're about, we're nowhere near the top. We're about 80% from the top, and we're probably not going to be sort of discussing exit strategy or discussion about putting a mine into production at least at around $35 silver. So, and that could happen end of the year. It could happen 18 months from now. We have to wait and see.
Well, I'll put a link to the Silver Elephant website as well as your social media profiles. Thank you so much for joining us today, John. Before I let you go, any final words you wanted to impart, whether about Silver Elephant, about the silver market in general, or whatever you'd like?
Yeah, just even though gold has broken on your all-time highs, kind of about 30%, and silver is kind of actually more than 30%. The equity are unloved. This is like 2002. It's a buyer's market, partly because of the crypto carnage and also the rising interest rate, the uncertainties in the equity market, given the mining company are in the equity class. So in terms of the mining equity relative to underlying gold and silver prices are at an extreme low. And companies like Silver Elephant, among some other quality juniors with silver ounces in the ground, are selling at unprecedented valuation. Like we're right now selling at $20 million, 100 million ounces in the ground at 20 cents per ounce of silver. I believe that the pendulum is going to swing the other way, especially if gold were to break out at 2,000, silver were to take out that $28 level this year. So it does present an interesting opportunity for these guys that have a bit of risk tolerance. I do agree about the accessibility to the CEO, which is a key. But like others, my MO is available, jlee@silverelef.com. I'm also quite active in Twitter. So if you're really a sort of investor looking to due diligence and have an interest in Silver Elephant, please reach out to us and we'll welcome you for the ride. And it's going to be very interesting. I had been taking a 6-month sabbatical on Twitter because I was focusing on running Silver Elephant on a full-time basis. But now we sort of really started our communication and marketing again. So I look forward to making more friends and have a broaden our audience and welcome you to join the ride together, Jesse.
Awesome. Well, thank you once again, John, and definitely look forward to chatting again. It's always fun to talk.
Yes, look forward to the next meeting.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.